whatever you guys want to do. Okay, so first let's just run through the charts, see where everything stands on a sort of a trading basis. Let's just go look at the dailies for a second, and we see the euro still remains basically compressed between this 33, 34, 34.50 range, and very, very contained within this levels. As you can see, this is, the euro basically is a breakout above 34.50, breakdown below 3,300. And for the last basically 2 weeks, we've been doing nothing but just kind of holding this range. And the reason why we've been holding this range is because I think there's a tremendous amount of uncertainty in the marketplace regarding U.S. monetary policy, regarding German elections, and of course, the single biggest uncertainty right now is regarding what happens to Syria. So you have this back and forth, flow, especially the last week of August when everybody is gone and everybody is essentially on vacation. Lots of, very little liquidity in the marketplace. Plus you have end of month flows. You have all sorts of other things that I think are really containing and compressing price action. And if you're a range-based trader, this has been a range-based trader's dream. You just basically sell 34s, buy 33s, sell 34s, buy 33s. If you're a breakout trader, the only thing you should do is sit on your hands. It's been very brutal to try to trade any of these. Every breakout has been a fake out right now. And generally, one of the interesting things about technical analysis and generally one of the interesting things about price action that we do have some degree of confidence on is, direction is very, very difficult to predict, right? Direction is almost random in many ways. It's almost impossible to predict direction. But we do know statistically, that volatility tends to be mean reverting, right? So generally what that means is that if we're going to be in a very compressed volatility environment for a while, that's going to be followed by a big volatility environment soon. Now, of course, it's just a statistical quirk. It's not by no means a guarantee. We could be in this very compressed volatility environment for a long time, and fake outs could be breakouts for a long time. But just statistically speaking, this could give us a little bit of a degree of confidence that if we do get a break of the 34.50s, then it's reasonable for us to assume that 35, 36 may be in view. If the 33s break down, then certainly we have 32s in view, and then of course a much deeper support all the way down to 30. That would be a complete crash for the euro and dollar strengthening. So my point being is that at this point, if you're a breakout trader, wait, because the odds favor some sort of a breakout eventually. But of course, there's no guarantee, and of course, past performance not indicative of future results. And of course, this can remain very stationary and just frustrate a lot of breakout traders for a long time. So that's kind of like where the euro stands. Yen is, even though it's having a good day today, right? Even though yen is having a good day today, it's still on a longer-term basis just really ugly and bearish. Because if you look at this trend line, what do we have here in the yen? We have basically a series of lower highs. And Roy's telling me that he thinks that the MT4 chart looks better. That's great, Roy, but I like to use IntelliCharts. So, because they're much more intuitive. So I think you can actually see on the IntelliCharts very clearly that we have a series of lower highs, have not been broken. 98 got basically spanked. To me, in my opinion, it is mildly bullish that we hold 97. And if we can, if we sort of close it at around 98 or close to 98 for the rest of the day, this 97 now becomes a key support level. And you could turn your bias to a more bullish bias using this as a support level, basically because this would have made a higher low, and therefore give you some confidence that maybe a near-term low has been put in place. But in order to get really aggressively bullish, you got to clear this 99 on a closing basis. This 99 really is just a major overhang, and until and unless 99 gets cleared on a closing basis, it's very hard to be anything more than just neutral on the yen for the time being. And of course, if 97 gets broken, we start trading around 96.50s. Then we have really big key support here at 96. And if that gets broken, it's just open game all the way down to 94. So my point is that we may have worked off the bearish bias in the yen for the time being, but by no means do the technicals tell us that this is anything but a dead cat bounce. You got to have 99s clear that would give us a much more serious conviction that there's more potential to the upside. Basically, yen really sees 99.50, 150 as big resistance levels over here, right? This is the big resistance level. And then if that gets cleared, if we have a much more powerful move, then of course we have a test of the 104s. All of this would necessitate, in my opinion, a really, really bullish U.S. economic scenario. That would suggest unemployment rate continuing to go down, U.S. growth starting to pick up at around 2%, the Fed beginning to taper, bonds going to 3%, all sorts of things that are just difficult to imagine right now. Not impossible by any means, stretch of imagination. It certainly could be possible, but certainly very difficult in today's environment to find. So that's the yen story. That's why I'm neutral at best on the yen right now from the technical point of view.